I want to discuss a blog by Benjamin Spector. He's a second-year PhD student at Stanford. I came across Benjamin in one of the lectures about ML systems, and I just read his blog. And I want to talk about some of the ideas that he's talking about, in particular, what he calls AI economics. I thought it was interesting because it really applies to it's not just what we do here at Orange Capital Partners, but in general, I think it's very useful for people to think about developments like AI and how sort of these secular shifts in big picture moves in an industry, how they affect almost everything, all the relative value that proliferates through an industry. And I think this podcast has the purpose of this podcast is to give people a sense of what it feels like to run a hedge fund. I think this is a very good example of what we're trying to achieve here. Is okay, we're not giving investment advice. We're not talking about buying or selling stocks. What we're really trying to do is give people a feeling for how to navigate this incredibly complex environment of investing, right? You have people with projects, and then you have their uncertainty, and then you have your own uncertainty in terms of what you're actually understanding, and then you have all the problems with portfolio management on top of it. When do you need the money? Are your customers happy? Do they need the money? I mean, it's really complex. So within that context, we here at Orange Capital Partners, we have chosen to build our investment strategy on what we call a principal stack. And I don't want to talk about this in detail here. It's a couple of principles that we base on 4 books. 0 to 1 by Peter Thiel, The Innovator's Dilemma by Clayton Christensen, Jim McKelvey's The Innovation Stack, and The Beginning of Infinity by David Deutsch. Those are the 4 books. Obviously, we highly recommend people to read those books. But again, this is not what we're talking about today. Today, we're going to talk about a fundamental shift in the way I think everything will be done, in particular software. And hardware, but and those are the main industries, because every company will become a software company, and every company will also become a hardware company, and I'm going to explain what that means. So therefore, this is a secular shift. In our opinion, is so massive that wealth will be created everywhere, and in particular in places that you might not have expected, or that you might not even be expecting now. And this is the opportunity. This is what hedge funds are all about. Hedge funds are not about trading. They're not about short selling something and buying something on time and then getting out in time. All that Hollywood stuff, good for those who can do it. That's not what we do, and we strongly believe that that's not what it's all about. What it's about is to spot these secular shifts and then position yourself and create the wealth that you promise to create to your customers. This is not even on podcast. It's February 12th, 2024. This is Krim Jelko. It's a Monday morning, so here in Europe, so the markets are still closed, and we're still the same situation like in the last episode. We're down 15.5%. The market's up 3.8%. We're underperforming by 19.3%. So let's talk about Benjamin's blog, the AI economics. What he says there is that he believes that training foundation models is kind of like the chip industry, in the sense that you have a few large providers that will invest massive amounts of capital to train models. Those models will depreciate very fast, and therefore it will become very difficult for anybody to sort of invest and catch up. So this is how the chip industry works. And I think I want to extend on this idea because I like the analogy. First, I think let's just talk about the actual fundamental dynamics. So what Benjamin is pointing out here is that we have this massive shift from supervised learning to foundation models. So when ImageNet, the ImageNet competition, which gets beaten by AlexNet, which is an algorithm that helps classify pictures basically. So this dynamic happens in 2012 and proliferates the first phase of AI, which is the kind of AI that I think we're all used to right now. It's the kind of stuff where you can do a search for your pictures on your iPhone. You can you have a pretty good spam email detector. You have relatively good handwriting recognition, and you have decent computer vision, which proliferates, let's say, your self-driving car to do lane keeping. Now, I would say that's already a little bit more advanced sort of robotics, in particular self-driving cars and things along those lines. But it's still the kind of, it's nested in the old world of AI, in the first phase of AI, or in the first neural net phase of AI, let's say it like that, to be fair to all the people who've been working on AI for decades before ImageNet. So the neural net supervised learning type AI. So that's the first phase. And then we have 2017, Benjamin's, it's interesting, he has one link on his website, which is just to the paper. Attention is all you need. So this is, I think he's trying to make a point here. This is when the big shift happens. 2017, we have the paper that comes out of Google Research. And then we have this massive proliferation of foundation models. I think that culminates in ChatGPT being released in November 2023. This is probably day one for most of us. It's not day one for the industry. The industry has been working on transformers for years. I've met Brian Catanzaro, who back then was at NVIDIA. I think he's still there, in 2017, and he spoke about this. It was a general meeting at GTC. I don't know him personally, but anyway, he said that transformers are the biggest thing that he's seen in a long time. And I couldn't wrap my head around that because I don't think I had the education. And this is a good example of what David Deutsch means, that observations are theory laden, right? I just didn't have the theory to actually understand how massive this idea is. And that's okay. I think that's, there's nothing wrong with that. One has to understand her limits and work on it. And I think, that's what I do. I understand my limits and I work on it. And that's why I'm doing a sabbatical now at Stanford. I also worked on some courses here in Zurich. And I'm actually also doing a deep dive reinforcement learning course at Berkeley. So I'm trying my best. I'm really sort of in this field now. I think as an educated observer. So let's get back to Benjamin. So he says that with the foundation models now becoming the AI of the day and at least the near future, what's going to happen is that you're going to have to train larger and larger models, because that's what's working, right? It's not exactly that's there's no mathematical rule that says, well, this is the trajectory of intelligence and this is how it's going to work. But it's working for us humans right now. I think we can do it. We know how to do it, and we know how to do it with language. So this is now my conjecture, is that we're going to have massive language models. So the large language models will be trained on even more data, and in particular also more languages. But then the next big phase will be multimodal. And I hope for listeners that have been following my NeurIPS coverage, that's one of the things that definitely came across in NeurIPS, that multimodal is very, very interesting, in particular for embodied intelligence. And I started a whole series called Foundation Models for Embodied Decision-Making Agents. So I, just to exemplify how important this is. So multimodal, it just means you have not just text, right? You have video, you have images, you have sound, you have tactile sensors, any kind of sensor that you can think of can be translated into zeros and ones and then used. And this is the big question, right? How can this be used? But I think to now use Ben's analogy here, we're just going to have to train bigger and bigger models. And I think this is probably what Elon Musk means when he says that Dojo is a very high return, low probability type of outcome. I think that's what he means. That maybe Tesla could train multimodal models and actually successfully apply them to the car. And if that works, then Tesla will be the x86 of embodied intelligence. And let me unpack that. x86 was the architecture that proliferated compute into the 21st century. So from the 1950s until sort of the late 2000s, sort of at the time when NVIDIA started taking over from Intel and also AMD started changing some of the architecture. So Intel dominated for probably about 30 years, maybe 40 years, and the x86 was the standard. And we believe that the same thing will happen with foundation models. We will have some standards. We will have some winners that will create an architecture and train those models and deliver them to the world, very similar to what Intel did with x86. So let's unpack that a little bit more. What does that mean to train and deliver to the world? Well, again, using Ben's comments, we will just take, you could imagine the multi, let's say, call it Dojo 1. Dojo 1, a multimodal model trained on, I don't know how many trillion tokens and billion parameters. And because it's multimodal, of course, it will require probably, n to the cube type or even more training iterations. So everything from floating point operations to memory reads to L1, L2, L3 cache and a high bandwidth memory and all the hierarchies in the stack, they will have to probably be more than cubed. And then, of course, you add the n, so n meaning, let's say, the amount of parameters, and that will be cubed. So you can see where this is going. If we have a 10 billion parameter model and we cube that is just going to dimensions which are at this point not reachable, but soon will be reachable if we just look at the chief, I believe it's Chief Science Officer Daly's his name at NVIDIA, that chart that also Ben shows in his ML systems lecture at Stanford. The chart that basically shows how much more performance NVIDIA has been able to get just in the last 10 years. It's been growing a lot more than Moore's Law, mainly because of sparsity, things like that. I don't want to go into the weeds there. The point is, I think there's a roadmap for the hardware industry to deliver that kind of performance, whether it's NVIDIA, whether it's somebody else, that remains to be seen. Certainly, that's one of the concrete ideas that we have here at Orange Capital Partners. And again, this is not investment advice, but if we just put this together and we look at the potential for CUDA and the NVIDIA architecture, which is not just GPUs, it's a software layer CUDA, it's an interconnect, and then it's also it's the GPUs, of course. That combination has the potential to deliver the kind of performance that is needed for a multimodal foundation model for the embodied decision-making agents. And it could be Tesla that actually delivers that. It could be somebody else. Tesla is definitely the best positioned company to do that because they have the data. And this goes back to a conversation I had recently about things like data lake and stuff. I mean, just basic stuff, okay? Why am I bringing that in? Sorry for the tangent, but my point is, like, it's one thing to talk about data in a sense, oh, well, we need data, right? Everybody says that. The other thing is to organize your company around your data. So to start with, let the tail wag the dog here a little bit. What do I mean with that? Well, how about we start with what kind of data do we need to deliver the kind of performance, to deliver the kind of product that we need? And Tesla has been doing that. They're not the only company, of course, but certainly the only company that is doing it at scale and is testing their products and services, in particular the FSD, on real customers all the time. Now, we in the investment community, we have our own problems with FSD. We've discussed that in the past. This is another tangent, I apologize. I just want to make that clear. There's one problem with FSD, it's just a nomenclature. I wish they hadn't called it FSD. It's like, imagine if Google had called their search engine full intelligence delivery system or something. People will be making fun of it all the time because that's not what it is, but it's an incredibly useful tool. And the same with FSD. If it was just called drive assist or something, or whatever name, certainly they wanted to differentiate themselves from ADAS and all these other legacy car names. But anyway, so that's one problem we have with FSD. The other problem we have with FSD is a regulatory problem. It's going very slow. In our opinion, that's because the car industry is lobbying left and right to slow Tesla down. I'm here in Europe, and it seems to me that Tesla here is facing competition by BMW and Mercedes and all these companies that are selling a lot more expensive cars, which are not nearly as good as Tesla's. But when it comes to hardware and particularly car features, legacy customers, they don't see much of a difference, and they also don't mind paying. But if you had a self-drive software which is just way superior than anything that the others can offer, then that would differentiate the car. And of course, that's what the legacy auto industry is now trying to do, is sort of stop the progress in the name of safety, which of course is bogus. Nobody's concerned about safety in the car industry more than they have to. What they're really concerned about is Tesla going away with a much better software. So anyway, we're frustrated with the regulatory side of FSD, and that's going to make it difficult for Tesla to monetize it. So we're going to have some problems in the next maybe 1 or 2 years with the stock when it comes to software. But eventually, we believe Tesla is very well positioned to take advantage because, again, they are building a data pipeline to deliver an embodied decision-making agent, and this is crucial. But back to the main line of this particular episode, which is that we believe we're talking about AI economics here, and the foundation models will be sort of the chip industry, the x86 of the future. So whoever grasps that, whoever becomes that standard, will be a very valuable company. It looks like NVIDIA is winning that race right now, and Tesla has a potential to come in and become maybe the multimodal game in town. Now, that doesn't mean that NVIDIA, of course, is trying to do the same thing, and then we have the Googles and the OpenAIs of this world. But Tesla has the data. Again, they don't just have the data, of course. They also have the experimental training ground of hundreds of thousands of customers driving their software every day, learning, iterating. All of that stuff can be done. We are a big fan here of iteration, but of course, at low cost of error and low cost of error correction, which unfortunately the FSD side of things is a little bit tricky. The errors here could be costly, not just because they could cost human lives or anything. Every car is, in a sense, a dangerous object, and we have 35,000 death people in the U.S. on the U.S. roads every year because of traffic accidents, and that has nothing to do with electric cars or autopilot or anything like that. It's just simply the nature of the beast. So safety is a problem, and needs to be solved. And iteration in the embodied decision-making agent space is certainly not as easy as it is, let's say, in the large language model space, because of mistakes. Now, another thing I want to talk about here is the Optimus robot. I think it's been making headlines recently. Again, this is certainly not something that we expect in the next couple of quarters to materialize. But if Tesla can do what we think they should be able to do, which is build an embodied decision-making agent, then there's no reason why that agent cannot be also a humanoid robot doing useful work in the factory. And that this is the beginning of, we believe, an industry on its own. So it's a little bit like when we had the computer industry, and then x86 came out, and then we had maybe the whole word processing industry, and the companies like Adobe were born into that type of available technology type space, when before that in the mainframe area there was no such thing. So we could have all new industries with a tremendous amount of wealth creation potential. So to summarize, thanks to Ben Spector and his blog, shout out to him, and also his lecture, very interesting. I'm going to put it in the show notes. Inspirational in the sense that he talks about the AI economics and how foundation models can become like the chip industry, where we have very large investments with very fast depreciation, but enormous amounts of value in each iteration. And we believe that Dojo could actually be the multimodal, foundation model production facility, and that's probably what Musk means with very high return and low probability of success. And that's why we're very interested in Tesla. There are roadblocks on the software side. There are some problems with iteration, and the cost of error are high, and the cost of error correction are relatively high. That can be lowered through simulation, for example. But nevertheless, of course, the trajectory is there, and we as a fund, it is our job to position ourselves and generate wealth with the industry. Thank you.